Hey, happy weekend, everybody. I am going to be out and about doing family stuff this weekend, so I thought I'd do a video recording. Um, Kind of an interesting chart here. Something I wish I was able to short back in September, but kind of an interesting take on what's happened to sentiment lately. Now, let me be very clear. I'm not picking on Zero Hedge. I look at them multiple times a day. I think it's a great site. It's kind of the granddaddy of bearish blogs, so I have a lot of respect for them. But this has nothing to do with respect. This is just data to do with readership. And it's interesting to me that the readership had been sort of climbing, and then in the summer when the market started to fall to pieces, it just exploded. I mean, you remember when their servers were melting down and they were going offline just from the load. In retrospect, we were all collectively pretty dumb not to recognize that as the bottom, and because it's just incredible. I mean, they nearly doubled their traffic in the span of a couple of months as the market was falling hard. And speaking of falling hard, you can see what happened afterward. Not coincidentally, kind of an interesting phenomenon with Elliott Wave as well. This isn't my data. This is public data off the web, and it's just kind of interesting that these kinds of sites are judging from this data kind of in a free fall. You may be curious if Slope's in the same situation. Not really. It's been really steady. I mean, my site's tiny, tiny, tiny compared to these guys, but the traffic has been just sailing along. It's actually been a little firmer this month than it was last month, and there are some things happening in the coming months that are gonna, I think, put Slope a bit more on the map. So you've got that to wonder about. I don't have gobs to say, but I just wanted to, I think, walk through some indexes and also maybe share some short ideas with you for what it's worth. I remain in short/cash mode. I have had anywhere from about 65 to 70% cash of late, and it's a good thing too, because we had just day after day after day of white candles. If you look here, let's change this to a candlestick. I mean, look at this. Beginning, the first day of the year was a black candle, yes, but it was a huge up day. So, simply stated, the entire year has been a bull run. Out of, what is this, 13 days, I think? There have been 12 white candles, meaning the close is higher than the open, and it's all been essentially higher because this guy right from the get-go was higher. So it's just been climbing every single day. Incredible. And a little weird, you know. So we'll see if and when it poops out. Of course, we remember this craziness too, when it just couldn't seem to make up its mind. But whereas this and this didn't really go anywhere, we seem to have sort of put the ruler on the screen and it'll just follow it kind of market again. Very steady, very, very steady. And so my modus is sort of like, well, let's wait till they run out of gas. And so I'm not playing both sides of the market, because the last thing I'm going to do is have a market neutral portfolio and then we plunge and it doesn't move. That would be agonizing. So I'm just keeping the foot lightly on the short pedal, and everything else is in cash, which tends to not budge. So today, for instance, even with that, when I say today, I mean Friday, even with that big, big burst at the end, the day wound up with a teeny tiny little profit, because I try to choose my shorts really carefully. Just going through, and I don't really usually use candlesticks, so let's get rid of this. I'm just going to thumb through these indexes for you. Some I won't even comment on. Nasdaq Composite, clear breakout as long as we stay above this level. It's just there's no reason for it to turn around and go the other way. There has to be some reason. There has to be some news, some event, something like that. My old friend HUI, this apple of my eye. This is still this is the big trade I want to set up. I usually have a small GDX position on. If we start to see the kind of breakdown I'm anticipating, I'm intending to put on a really substantial short position on GDX because this is just a very compelling setup. Indu, nearly another triple digit gain. And importantly, I think we've crossed above this trend line. And this line goes back, that's a channel actually, it goes back to the peak of the market of all time, October 11, 2007. So we've crossed above that descending trend line. Very interesting. Look at that. Just right above it. NDX held back a bit today by Google, but still quite in the breakout mode. If we look at this basing pattern, provided we stay above this horizontal, it's really just going to keep chugging higher, especially if we get some kind of news that the bulls like from Bernanke on Wednesday. Remember that at 12:30 EST is the big Fed Day announcement. So, to say nothing of the Apple earnings on Tuesday. A rut is not stuck in a rut. It is burst above this kind of line in the sand, which had divided this very bearish pattern from this very bullish pattern. And the point of indecision has been crossed, and it's been crossed to the upside. I say again, this looks like an up market, provided there isn't a failure beneath this line. There's kind of like three levels of failure. Level one would be any descent beneath that line, but that could be shaken off. Level two would be, I think, a drop beneath the lows of the 13th. And level three, which I think is the least likely but the most exciting, would be a penetration of this trend line, a failure of that ascending trend line. Semiconductors, obviously very strong last week. S&P managed to eke out its 67th gain in a row. We have been by and large on a big up streak since the 4th of October. Rather choppy at the beginning here, but ever since December 19th, just steady, steady, steady as she goes higher. Just going to skip ahead a little bit here. Oh, I will mention XBD, watching for a retrace to as high as about 101 or so. I think that would, if we do manage to get that high, I think that would pretty much indicate the exhaustion of the financials rally. Thumbing through a few other items here. Crude oil is getting walloped. Very interesting resistance against both this horizontal line and this former supporting trend line, now resistance. ES, as I mentioned, had to have another green day. Just unbelievable. Gold, don't really have any strong opinions on this. Really don't have a position. NQ, same shtick, and much stronger than S&P, as you know, just kind of leading the way. Silver, an amazing day on this one. Didn't have a position on it. Bonds continue to break down quite nicely. We broke beneath this trend line back on the 4th of January, and we broke beneath this lower trend line on the 19th and continue to descend beneath it on Friday. So obviously the Fed announcement on Wednesday will affect bonds, but with interest rates at lows that, even if I saw a chart the other day that spanned, I think, 2 centuries, we're basically at some of the lowest interest rates of modern history. I guess it's not a shock that the bond bubble is starting to to fall. Just swiftly, I'll share with you some things I've got in the hopper as far as possible bearish ideas, and just for your viewing pleasure, I'll just thumb through these. Any that grab your attention, you're welcome to jot the symbol down, because typically these have exhibited the prospect of dropping lower and have retraced to some degree, or they're at the top of a fairly well-defined range. This kind of pattern doesn't always work out clearly. Sometimes it happily pushes past whatever resistance line might be there and makes it moot. But I try to short these things when it's relatively close to resistance, but at the same time not so close, not so matched up against resistance that it's threatening like a few pennies and they'll be pushed out of the way. I'd rather have already approached resistance and be exhibiting weakness. This is a nice example of a series of lower lows and lower highs. Got a triangle here, and I'll just finish up the rest, one after the other, just to share my hard work here. Click an ad. And just a few more to go for your weekend jollies. And that is it. And so that's it for me, and I bid you adieu.